Welcome back to Morning Trade Live. Time for Chartmaster. Jenny Horne will take us through the fundamentals. Rick Ducat will take us through the technicals. So first up, we're looking at Snowflake is down more than 10% this month. Bank of America, though, did give an upgrade to the stock to buy from a neutral. Let's hear more about this.
Yeah, I feel like a lot of these stocks, which Snowflake included, really started off, I mean, this earnings period quite strong, as software hugely was doing quite well. And then we've seen some of that momentum start to fade, and that's been very much reflected in some of Snowflake's recent underperformance. But as you said, actually a pretty, optimistic note, all things considered, an upgrade from B of A to buy from neutral. Price target was raised by about $20 a share to $240. So would imply, some decent upside from here of about, $50 so dollars. But three distinct proprietary data sources they believe point to momentum in Snowflake's data warehouse and emerging Cortex AI and Snowpark developer businesses. They do believe that the second quarter earnings, which are out next week, August 27th, of course, on Wednesday, will be a catalyst for the stock. But they note that behind this upgrade, this is really driven by expectations of outperformance more so over the long term. So I think that that's an interesting distinction, because a lot of these, I think analysts can oftentimes be fairly reactionary, where it feels like, okay, you're accommodating for some of the recent weakness or some of the recent upside, depending on what conviction you're taking. But this is more of like, hey, we really believe in this business and some of its offerings and its build into AI in the next 12 months. So they're seemingly going to be long-term holders of this name, which I do think is encouraging if you're looking at like sentiment from the sell side today. So while we've pulled back substantially in Snowflake shares, perhaps earnings could be that next leg up, as they do report on a very interesting day, as NVIDIA, I'm sure, will be center stage on August 27th.
Okay, look, right now Snowflake's down just a little bit off the 229 highs. Today down about 0.5%. Rick, what do you think about this chart?
Yeah, so this one we can see that the general trajectory of recent price activity, I think you could argue, is kind of a falling wedge type shape here. So on one hand, we did have a breakout above this 193 level. Our green line here that represented an old high point, that was about where we had our low point after the gap up that happened on earnings. From there, we did make some new highs, but we, for the most part, have gotten stuck around that 225 level. The intraday high did come in around 229.27 or so, but from there we have faltered a little bit here. When I say a falling wedge type shape, two trend lines converging toward each other, both pointing down. In this case, the much steeper one is going across the highs here, typically regarded as more of a bullish type pattern here, but really it can go either way. What you're looking for is a breakout beyond either of those two inflection points of our trend line here. For now, though, price is stabilizing around that 193 level. You can see here has stabilized for the most part here, but today's price action bringing it a bit below that level as we head into earnings. If we were to move lower, 184.09 represents some high points before we had that gap up that we mentioned previously on earnings. Momentum more geared toward the bearish side, a bit lower here, but we can see that earnings could potentially provide a catalyst that could shake that up quite a bit here. If we were to look at our other studies, volume profile and standard deviation channels, we can see the volume nodes right about here line up with that 184 level that we mentioned, so that's a notable downside point to consider. To the upside, we have this node near about 210 or so, but we also have this confluence, yellow 21-day, orange 63-day exponential moving averages coming together right around 202, like a little bit above that area, so that could be another upside point to watch.
Yeah, and you mentioned here the Bank of America Securities, this buy rating and the upgrade with the price target. Also, I don't know if you mentioned, you may have a 250 price target from UBS recently too, another buy rating. So folks are jumping on board, I guess, on this recent pullback with this stock down over 14% this month. Jenny, what do you think about some of the apparel stocks? There was a call here from Citi, and this was a downgrade, and I think Abercrombie was in there too.
Yeah, so this is an interesting one because they were really our poster child of a turnaround story for retail. And you see, overall, just consumer preferences evolve so quickly in the retail environment, and the favorability we saw in Abercrombie and Fitch was huge for several years, and we've seen a very different 2025, at least thus far, for Abercrombie and Fitch. Of course, a lot of these use retailers have seen this same pressure, though. But if you look at just the last 3 or so months, we actually have no real outright bulls in this name anymore. There are 7 analysts that do lean somewhat bullish and 3 that are neutral. So conviction still hugely is at least neutral to modestly bullish, and there's no outright sells or underperforms in this name, at least through yesterday's close. But there is still this thinking of, hey, perhaps this name ran up far too quickly, and we're starting to see analysts sort of mention this as Citi did downgrade shares again to neutral from buy. Unchanged price target, though, of $105 a share, so about $15 of upside from where we are currently trading, saying they are more cautious on the specialty apparel group heading into the second half of this year, and noted that the shares are within now about 10% of that price target. They do see Abercrombie potentially having to cut its 2025 earnings guidance when, of course, reporting second quarter numbers as a result of these higher tariffs. So the question will be if they have to raise costs and prices for that already cost-conscious consumer. Right now, though, the trends have been very split, where we do see, of course, names like TJX benefit from their value-oriented offerings, whereas Abercrombie Fitch, to me, competes more with the likes of like an Urban Outfitters, but doesn't have that same really solid, sticky subscription revenue that right now Urban has benefited from hugely. So the turnaround story has been amazing to watch, but the momentum really has faded as tariffs and the macro situation, frankly, is just overshadowed that overall brand recovery.
I mean, from $172 down to $65 at the lowest point there this year, but it's at $90, still well off, over 45% lower in 1 year. Rick, your thoughts?
Yeah, so for this one, we can see that we've had this gradual bottoming pattern here that we saw between 65 to 70. So for the most part, holding on to this low area here. Earnings did give us a bit of a lift to the upside here, but it quickly faded and we retreated back to this familiar territory. 106 was an interesting high point here. It was a low there, subsequent highs after the breakdown. Price didn't quite make it up to that level to test it, but we did here more recently. So now drifting back downward, more toward this green line now, our 87 level. That was our high point after our gap downward here, and that's about where we had some support after we did break to the upside here. Now price is drifting below our orange 63-day exponential moving average. We're below all 3 of our moving averages. They're tilting downward here, so more of a downward bias here. You can also see that momentum, our RSI study here, has slipped below that 50 midline, signifying a more bearish shift as well. So maybe not exactly what you'd want to see heading into earnings if you were bullish in this name, but still we're remaining above that notable supportive area here. If we were to look at our other studies, the volume profile point of control, the heaviest trading area of all, that comes in right around 80. So that's a key level to watch to the downside if we do break through 87. For price to hold, we can see also additional volume activity right here near about 96. That lines up with our yellow 21-day EMA. Then we've got our red line 106 ultimately for an upside resistance point to watch.
Okay. How about Oklo? Because that's the last but not least name here and has been a huge winner. It's up more than 200% for 2025, and UBS has a neutral rating. Jenny, tell us more about that.
Yeah, I think that the story with these nuclear names has been quite interesting, and we saw a ton of just street interest in the back of 2024 when it was brought into the conversation of, hey, you need alternative energy sources to power the massive restructuring of the energy capabilities, around the world, to really be able to fulfill these AI expectations with data centers and just the mass power that's needed. So when looking at Oklo specifically, though, this company has been very busy. They did just announce this major partnership with the U.S. Air Force, but a big right now risk is still the execution burden of scaling these nuclear projects. Their plans are very much still in the early phases, and we do know that there's a Aurora powerhouse which is expected to be operational by late 2027, early 2028. But again, we're talking long-term timelines here to really see this company start to generate some serious income. And so right now we've seen nuclear projects also have a long history of delays as well as overruns and regulatory concerns. So not to dampen what has been a really great story, but there is still that degree of risk. And UBS did start coverage with a neutral rating and a $65 price target, highlighting they are cautiously optimistic on Oklo and the potential for a broader U.S. nuclear infrastructure build out right now, but they're awaiting further commercialization progress. And Oklo right now has the potential, in their opinion, to deploy the first commercial small modular reactor in the U.S., as well as what they said could be a substantial total addressable market of around $775 billion per year. However, they did still mention there are risks in this space. Right now, nuclear project development is going to be expensive. Valuations for a lot of these names, like Vistra is another one, that do remain fairly elevated right now, given, of course, the phenomenal run we've seen up in these names for, I mean, at this point, like 18 months or so. So the broader nuclear space is one, I think, that will be hugely important. But again, we're going to have to wait out what is going to be long-awaited timelines to really see these companies start to benefit and monetize from these efforts.
Your story just came on like a whirlwind. We think about utilities or how we're going to be powering all these data centers. It was not something we spoke about years ago, and then it came on as an alternative or maybe as a solution and has had an incredible run here. When I look at this one-year chart of over 700% for Oklo, it's pretty amazing. What do you think about this chart here, Rick Ducat?
Yeah, a really strong move upward here. And when we look at this price activity, once again, we try to focus on some horizontal levels to provide us with some potential guidelines here. So if we were to backtrack, the 59 level, that was roughly where we hit our intraday highs. That was where we hit them again. And that was where we found support recently. So this would be one area that traders might consider to be on the lookout for potential support. Today, we are finding ourselves right on the verge of crossing below our orange 63-day EMA. That comes in at 61.44 right at this moment here. To the upside, though, our red line, the 69 level, that's about where we had our best close there, heading into the further highs. Resistance, support once again, and then the breakdown. So 59 to 69, a 10-point range. Those are some areas that would stand out from a technical perspective here. RSI momentum trending downward here, a bit more of a bearish bias here. We can see that our yellow 21-day EMA has turned downward here, suggesting early signs of potential trend change here. But as we said, there's some other levels to consider before we start to get below that. If we were to move lower, this heavy volume area is just below that green line that we mentioned there. So oftentimes you'll find the extreme prices and the heavy volume don't match up quite exactly here. 55 or so is where the heavy volume is. So 55 to 59 could be a supportive zone then. Once again, 69 to the upside is our resistance area. Notice as well, we're quite close to our linear regression line, our line of best fit. So by some measures, this is an idea of fair value. With that thinking, price is pretty close to where you might expect it to be relative to its own history.
All right, thank you both so much. Really, three key names there that you took a look at, both Rick Ducat and Jenny Horne. We looked at Oklo and Abercrombie Fitch and Snowflake as well. Thank you. A great chart master today and every day. We appreciate it.